What's up guys, your agent Tyler Wehrung here, and today we're going to do a video about a unique type of HELOC that I've been getting questions about lately called the Hybrid HELOC. And to do that, I'm going to walk you guys through the differences between a traditional HELOC, a home equity loan, because that's truly what the Hybrid HELOC is a combination or a hybrid of. So first I'm going to compare and contrast like I usually do between the home equity loan and the home equity line of credit or the HELOC. So guys, as always, I'm going to talk in generalities around most HELOCs. Every little bank and credit union has their own unique way of doing things, but I'm talking about if you go out to these big banks, these are the types of things you can expect. So don't hold me to the rail or whatever you call it if something I tell you in this video is slightly off when you go out to call your bank. But this video is really just to give you a generality or a general understanding of these different concepts and how the hybrid really ties them together and it combines kind of the best of both worlds. So with that, let's go. All right guys, so first let's talk about the similarities of both the home equity loan and the home equity line of credit. And the reason why we're using or even considering using both of these is that you're using the equity in your home as an asset to secure this debt that we're going to go get. All right, you could go get an unsecured loan or unsecured personal loan, but the rates would probably be through the roof. The same with a credit card. If you've ever gotten a credit card, you're likely going to pay, upwards of 15 to 22% APR because it's not tied to anything, right? So if you don't pay your credit card, the bank has nothing to go after you on other than screwing your credit score up. But here they can go after your home and they know that you have a good portion of equity in your home if you don't pay that, so you have a much higher incentive to pay them back, which is why they're willing to give you better terms on both of these products. All right, so that's why we're using them in the first place. But now we need to understand which is the better option for you, and then at the end we'll talk about the hybrid approach if you can find a bank that will do that for you. So let's first start off talking about the home equity loan. So the main difference between the HELOC and the loan is the loan you're going to be taking out a lump sum of money. For this example, let's just assume in both scenarios the bank is willing to give you either a $50,000 loan or a $50K line of credit. All right, so in the loan example, you're going to be getting a check at closing for $50,000. Whereas in the HELOC, you're going to be getting access to $50,000 if you decide you need it. You could decide you need $10,000 of that 50 and only pull that 10 out, which ties into the interest piece and why that's important in both cases. So from day one, once you get the check for $50,000 in the loan scenario, you're going to be paying interest on that full amount. You can't go back and say, well, I only needed $10,000, so only charge me interest there. In the HELOC, you can do that. Or you can decide not to use it at all. You can go ahead and open it and not use it for 5 years. Now, sometimes you will pay just a recurring fee or a maintenance fee to keep that open, but it's very minimal. But that's the huge benefit with the HELOC over the loan is that you're only paying interest on the amount of debt that you're taking out. So when it comes to that interest, one pro with the home equity loan is that this is a fixed interest rate for the duration of the loan, and it's usually a little bit lower. You can get some pretty good rates on HELOC loans, just slightly above the traditional mortgage rates. Now, in a home equity line of credit, it's variable. Since the bank knows they're not getting, they may only get a piece of, what they give you a line of credit on. They want to make sure they take advantage of that and get a full amount there. So that is going to vary, and I'll link to a video over here I shot all about interest rates with HELOCs and what they're tied to and how they adjust. But for this example, just know that that rate does vary, which gives a higher risk to you as the borrower, as you're not sure what that's going to vary to, versus a fixed rate that you'll have for the duration of the loan. And that loan is also principal and interest. You have a P&I, which means every payment that you make back to that loan, a portion of that pays down the principal, which is not always the case in the HELOC. Most HELOCs are interest only, and a lot of people make the payments for a couple years and don't realize they're only paying the interest, and they would still owe that full amount that they borrowed at the end, assuming they didn't make any additional principal only payments. For the loan, it is a fully amortizing loan, which means if you got a loan for 20 years, because you're paying a portion of that is principal, by the end of that 20 years, your balance would be zero. So it's just like a normal mortgage that you take out. At the end of a 30-year mortgage, your balance is zero because it amortizes every month and you pay that balance down. Whereas a HELOC, it's typically a 10-year draw period. They call it a 10-20. It's a 10-year draw period, and then usually it goes to a 20-year repayment period where they do start to make you pay that principal and interest payment and start to amortize it from there. But a lot of people get confused on this. So I like to just say in general, HELOC payments are interest only. Loan payments are P&I payments like you're used to on homes and cars. All right, and then with the loan, you're also going to pay higher closing costs and fees because they are going through a kind of a more robust underwriting, giving you that full amount up front as opposed to the HELOC. I rarely pay any closing costs at all when I'm opening up a home equity line of credit. Like I said, there's usually just a maintenance fee that's associated, and you may pay some minor closing costs, but I would not get into a HELOC that has significant closing costs. All right, so that's the real pros and cons, and based on your scenario, you typically would decide which of these is best for you. I always recommend for the shorter approach, or if you're not sure what you're going to get yourself into, I always recommend the home equity line of credit because there's no downside to opening it up other than that small yearly fee that you'll pay versus the loan. Once you go ahead and open that up, you've already paid those closing costs and then you decide you don't need it down the road, you're still paying interest that whole time for the full amount no matter what you decide to use. But there are cases where this could be good for you. So now let's talk about the hybrid HELOC. So what the hybrid HELOC is, and this isn't available in all banks, so you have to do your own research. I am working on a resource for you guys to be able to point you in the right direction of the banks that I trust and would be willing to recommend who are offering some of these products, but I'm not there yet, so bear with me. But what the hybrid HELOC really is takes the kind of the pros of both of these and put them together in one product so you don't really have to choose. It kind of gives you the benefits of both worlds. All right, so the hybrid HELOC does take the first advantage of the HELOC being that it is an open line of credit. They don't make you take this full loan amount out. It still is a HELOC in nature, so it is that full line of credit. And then secondly, it takes the biggest pro of the loan. It takes this fixed rate. It gives you the fixed rate that you're paying back on whatever you do decide, if anything, to pull out on that HELOC. So that's the big disadvantage with the HELOC is the variable interest rate, where the hybrid HELOC solves that for you. It does also give you a P&I payment to pay that money back. Now, some people see that as a con because that will make your payment back to them higher. So if you're in this for the short game and you just want to get in and out, this could be seen as a con, but for most people that use this, they want to know that every payment they're making back is going towards that principal and is going to help them in the long run. So it is P&I, which means it's fully amortizing. So once you take this out and you pay it back, if you make those payments back, your balance will be zero at the end. But it does take the downside of the loan in the higher closing costs and fees. So you're going to pay upfront for some of these benefits, but depending on how you're planning to use this product, it could make sense for you to go out and do that. In most cases, if you're planning on using this more than once or twice in any 5-year period, your benefits are probably going to outweigh your closing costs and fees. So if you can get this hybrid HELOC, I would probably be a big proponent of trying to do that, but you're going to have to do some research, call around, and make sure that you know what you're getting yourself into. So do your research, call at least 3 to 4 lenders before you decide to let that specific lender pull your credit. Now, oftentimes they'll try to say they can't really talk about it until they know what your credit is, and you can say, my credit score is this, run this scenario for me at this rate, and if you can't do that, then I'm sorry, I'm going to go with someone else. I don't let people yank me around and try to pull my credit here and there without really understanding what that is. The banks know once they pull your credit and you've taken that ding, you're more likely to move forward, so they try to use that as a pressure point, but I don't like to let them push me around that way. So that's just one suggestion I would make when you are shopping these different lenders around. But guys, I hope that was helpful to first describe the pros and cons or the differences of the loan and the line of credit, and then to talk about the hybrid HELOC and to let you know how to dig and find that. And guys, if you find one out there, if you do some research and find an amazing hybrid HELOC, please drop it in the comments for other folks to find and let this community kind of all benefit each other. Now, like I said, I'm working on a resource that I can share out to you guys from vetted lenders that I know will treat you right, do the right thing, and can be trusted. But in the meantime, I'll take any input from you guys on what you guys are finding out there in the marketplace. And guys, these things are always changing. We're in a rising interest rate environment, so you may talk to someone one day and they may not be there the next. So which is why I've had trouble putting this resource together in the first place. But guys, if you got anything out of this, as always, give me a like or subscribe. That would be a small token of appreciation I'd be eternally grateful for. But with that, I'm Tyler Wehrung, and we'll catch you next time.